Welcome back to the 4th episode of the 10k portfolio challenge, where I'm practically now all in on iron. So how is everybody's portfolio doing after Trump invaded Iran? So how is everybody's portfolio doing after Trump invaded Iran? Or I guess you would call it an excursion. But I'm pretty sure my primary school excursion was a little bit different. So from the last update, the fear and greed index is hanging out at the extreme fear level once again, and the sentiment in the market really seems to be fear, 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 and fear. And if you take a look at the S&P 500 vs its 125-day moving average, right, it will also tell you a scary news. The last time the S&P 500 crossed its 125-day moving average, it actually proceeded to drop much more. And how much did it continue to drop? So if you refer to the red or the pink line, right, that is the 125-day moving average, which is what they use for the CNN indicator that we saw just now. And so you can see that when the S&P 500 actually crossed the pink line, it proceeded to drop another 18%. So how far are we into the drop actually? So oddly enough, the S&P 500 has only dropped around 4% after it crossed its 125-day moving average, and only 7% from the all-time high. So the market has not even entered correction territory, which is defined by a 10% drop, and we are only somewhat in a mini pullback of a 7% from the top. So potentially, right, what are some of the levels that I'm looking at? So in scenario 1, which is the green line, somehow magically the Strait of Hormuz is secured and Iran makes a deal with US and Israel, and everyone will rush back into stocks and risk assets and everything will fly like nothing happened. But honestly, I doubt this will happen with the amphibious group just being on the way, and I will probably assign a 5 to 10% chance of this happening. But anyway, these are purely my thoughts and speculation. At the end of the day, Adam Khoo doesn't know, nobody knows, and except other than perhaps Trump knows. So do not take this as financial advice, and let's go to scenario 2. So next is the orange scenario, where perhaps next week we may get a relief bounce, and then before another drop. Perhaps due to Trump announcing that ground forces have entered or landed on Kak Island, or perhaps they will start operations to secure the Strait of Hormuz. In that scenario, I think the market dips badly for another 1 or 2 weeks. And honestly, based on news and a bit of gut feel, I would assign perhaps a 60 to 70% chance of this happening. And this will coincide with the S&P 500 entering a correction zone of around 10% or 12% from the top. And the VIX may also achieve one more big spike, just like what we saw the previous times during the big dips, which marks the bottom, and oil prices could also see one final big surge before collapsing. So if you look at the oil charts, right, which I'm getting a bit of a silver vibes here, where silver saw a big parabolic spike before retail rush in and before the big boys dump on you. So oil prices forming a higher high is probably what I'll look at as well. So I think the last scenario is the absolute worst, where some nuclear ape shit happens and markets may correct 20% or so, and Trump will lose the entire House and Senate, and he'll probably go down as the worst president of all time. But I do believe Trump watches the stock market daily, and I do believe that Trump wants his last presidency of his to be one that will be his legacy. So I really doubt Trump wants to lose everything and be deemed as a warmonger who plunged America into recession or even depression. But I think this doesn't sound like him. He probably sounds a bit more like,
I've solved 6 wars in 6 months when you think about it.
So anyway, let's talk about iron. For iron, what I'm seeing is that we are stuck in this bullish pennant. It is stuck between the lows of $33 and around $37. What we really want to see is a big breakout past the $45 and $50 range, with a big volume to be able to break out of this pennant. The Bollinger Bands are also starting to squeeze, which tells us that the answer of going up or down will probably come very soon. So fingers crossed, let's hope we go up. But unfortunately, if you are talking about iron, at this juncture, we would probably still have to look at the Bitcoin charts and pricing. Because even though iron is pivoting away from Bitcoin mining into AI and high power computing or HPC, the fact is that majority of its income still comes from Bitcoin mining, and generally the markets do correlate Bitcoin movement with iron. So if we take a look at the Bitcoin chart, right, on a shorter time basis, I think Bitcoin in general for this past month or so, from February onwards, it somewhat looks bullish in the sense that we are trading in this upward sloping channel. So short term wise, we really don't want to see Bitcoin breaking out of this multi-year long trend line, perhaps at around 66,000. So short term wise, you really want it to hold on to this level and then start to U-turn up at this level. If not, we may see somewhat of a repeat of 20th January, where it broke down gloriously through the channel and dropping around 30% from 90,000 to around 62,000. So I think in general, there are two camps of people on Bitcoin now. So the first is the bullish side. Some is arguing that because we have hit this range of 62 to 66,000, which actually is the all-time high of the previous 4-year cycle, this will be an extremely strong support which may mark the bottom so that we can continue higher. So if you look at the multi-year trend of Bitcoin, follow along with me on their argument. So if you compare the last bull run to the current bull run of the Bitcoin, right, you can see that from 2020 to 2022, the Bitcoin started its first run here at around perhaps March of 2020. And then this is the first leg up, followed by a small correction. First leg up, and then a small correction. Second wave up, followed by a small correction, and followed by a small correction. And the final big wave up, before a crash just start, and before the crash start again, a mini bounce off the bottom, and then the next crash. So the bears are arguing that we are just here, and that we will see another drop, which is here. And if you take a look at the previous drop, right, this is actually quite a huge drop of around 40 to 50%. So will we see another 40 to 50% drop from here? Well, I think only time will tell. But the scary part is if you overlay a stock market cycle on this Bitcoin chart, so the bears are arguing that we are only in the anxiety and denial range and there will be one more big drop that will induce panic, and that is where the real capitulation occurs. And unfortunately, if Bitcoin really follows the bear thesis, $26 for iron will be on the horizon, and worst case, even $15. So anyway, if you are curious about my iron or IRE portfolio, right, I'm still continuing to DCA and buying the dip. So my average price now is around 39.19. And the current stock price of IRE after the reverse stock split is around 20.21 or so. So I'm down 49% on my IRE portfolio, and it is time to train our boss. So execution and transition for iron is now key, and you can only continue to watch on how the macro will play out. So what do you think, and where do you think we are in the cycle? Will we bounce here, or will Trump tackle out? Comment down below and I'll see you on the next one. And anyway, if you want to start investing, you can learn the basics here. And before you leave, if anyone was interested in my silver trade on the previous episode, I have exited the trade last month, and I probably would have earned more if I held it all the way, but no complaints for a positive trade. See you on the next one.